What if I told you there are 5 stocks in this market right now that all connect to the same major trend, but the risk-reward is completely different for each one? Some are high-quality businesses. Some are speculative. Some are too expensive today, but worth watching on a pullback. And by the end of this video, I'm going to rank all 5 from least attractive to most attractive. And before we get into the list, if you're a U.S. retail investor trying to build a practical watch list instead of chasing random headlines, subscribe to Stock Breakout. Hit the like button and comment one ticker you think could benefit the most from a stablecoin trade. Because today's video is not just about CRCL. CRCL surged 19.89% yesterday. And from a technical perspective, the stock still looks bullish. The move came as investors reacted to renewed optimism around stablecoin legislation and the idea that compliant stablecoin companies may finally get a clearer path forward. But here is the bigger question. If CRCL is the obvious trade, what is the second-order trade? Because sometimes the stock that moves first is not the only stock that benefits. Sometimes the real opportunity is in the ecosystem around the theme. That is what this watch list is about. This is not a casual watch list. Every stock on this list plays a different role in the stablecoin repricing trade. We're looking at 5 names: Coinbase, PayPal, Robinhood, Visa, and Block. The theme is simple. Stablecoins are moving from crypto-native speculation into payments, settlement, consumer finance, trading platforms, and merchant infrastructure. CRCL is the pure-play headline. But if stablecoins become a bigger part of how money moves, the benefit could spread across exchanges, payment networks, digital wallets, and fintech platforms. Now, the ranking criteria today are not just which stock can go up the most. We are ranking these by risk-reward, business quality, direct exposure to stablecoins, valuation risk, and how believable the catalyst is over the next 6 to 12 months. That matters because not every good company is a good buy at any price. Let's start with Coinbase, ticker Coin. Coinbase is one of the most direct second-order beneficiaries of the stablecoin theme because of its relationship with USDC. Coinbase is not just a crypto exchange anymore. It is trying to become crypto infrastructure, custody, trading, subscriptions, staking, derivatives, base, and stablecoin distribution all in one platform. The catalyst is clear. If USDC supply grows, if stablecoin usage grows, and if more customers hold USDC inside Coinbase products, Coinbase can benefit without needing every user to actively trade every day. That is important because trading revenue is cyclical. Stablecoin revenue is a different kind of engine. Coinbase reported that total trading volume reached $5.2 trillion in 2025, while average USDC balances held in Coinbase products reached $17.8 billion, and average USDC market capitalization reached $76.2 billion. That is the key number for Coin. $17.8 billion in average USDC balances inside Coinbase products. The risk is also obvious. Coinbase still trades like a crypto beta stock. If Bitcoin rolls over, if retail activity slows, or if regulators tighten the rules in a way that hurts rewards and distribution, Coin can sell off quickly. The watchlist view is this. Coinbase may be the cleanest second-order stablecoin beneficiary because it has direct economics, real scale, and multiple ways to monetize the crypto ecosystem. This one is not low risk, but compared with pure hype trades, it has a stronger business foundation. Next is PayPal, ticker PayPal. PayPal is not usually the first name retail investors think of when they hear stablecoins. That may be exactly why it belongs on this list. PayPal has Piest, its own dollar-backed stablecoin. And more importantly, PayPal has the kind of user base and payments network that could actually bring stablecoins into mainstream use. The catalyst here is adoption. PayPal announced in March that PYUSD was becoming available to users across 70 markets. The company said the stablecoin is designed for faster settlement and lower-cost global money movement. That matters because PayPal already sits inside consumer payments, merchant payments, Venmo, cross-border commerce, and digital wallets. The key number is massive. In 2025, PayPal processed $1.79 trillion in total payment volume and had 439 million active accounts. That gives PayPal a distribution advantage that most crypto-native companies would love to have. The risk is that PayPal has been a frustrating stock for years. The company has scale, but growth has not always been exciting. Competition is intense. Margins are watched closely, and stablecoins may not become a major earnings driver fast enough to change the market's opinion. The watchlist view is this. PayPal is not the highest upside stablecoin name, but may have one of the most realistic paths to mainstream stablecoin utility. This one has strong long-term optionality, especially if PYUSD becomes part of everyday payments instead of just another crypto product. Now let's talk about Robinhood, ticker HOOD. Robinhood is the speculative name on this list. This one has the highest upside if retail crypto activity comes roaring back, but also some of the highest risk. The business is simple to understand. Robinhood has millions of retail users. It has brokerage, options, crypto, retirement, banking products, credit card products, and a growing ambition to become a broader financial super app. If stablecoins become more common inside consumer finance, trading, deposits, tokenized assets, and instant settlement, Robinhood has the audience to benefit. But the numbers show why this stock needs caution. Robinhood reported 27.4 million funded customers and $307 billion in total platform assets as of March 31st, 2026. It also reported 4.3 million gold subscribers. That scale is real. But the risk is real too. In Q1 2026, Robinhood's crypto-related revenue dropped 47% year-over-year to $134 million, showing how sensitive the business can be when crypto activity cools. That is the key number for HOOD. Crypto revenue down 47%. So yes, Robinhood can benefit if the stablecoin and crypto theme gets repriced higher. But this is not the same as owning a stablecoin infrastructure leader. This is retail activity beta. The watchlist view is this. HOOD is exciting, but investors need to size it like a volatile fintech stock, not like a stable compounder. This one has upside, but the downside can move fast. Next is Visa, ticker V. Visa is the highest quality business on this list. It is not the most explosive. It is not the most speculative. It probably will not move like CRCL on a single stablecoin headline. But Visa matters because stablecoin settlement could become part of the institutional payment system. Visa recently announced that its stablecoin settlement pilot had expanded to 9 blockchains and reached a $7 billion annualized stablecoin settlement run rate, up 50% from the prior quarter. That is the key number. $7 billion annualized. Now, compared with Visa's overall payment volume, that is still small. Very small. But that is exactly why it is interesting. Visa does not need stablecoins to replace its business. Visa only needs stablecoins to become another settlement rail that strengthens the network. The catalyst is institutional adoption. If banks, issuers, acquirers, and merchants increasingly use stablecoins for faster settlement, Visa can participate without taking the same balance sheet or regulatory risk as a stablecoin issuer. The risk is that the upside may be limited. Visa is already a premium business. It is already widely owned, and stablecoins may remain too small to move the earnings needle in the near term. The watchlist view is this. Visa is the best business quality on the list, but not the most aggressive risk-reward setup. This is the name for investors who want exposure to the theme without betting the whole thesis on crypto speculation. Now let's talk about Block, ticker XYZ. Block is a more complicated setup. The company owns Cash App, Square, Afterpay, BitKey, Proto, and other financial tools. It has consumer payments, merchant payments, Bitcoin exposure, and a history of pushing into new financial rails. Cash App announced support for stablecoins and fast, low-cost payments, and Block has also highlighted Cash App's large user base. The key number is 59 million. As of December 2025, Cash App had 59 million monthly transacting actives across the United States. That is why Block belongs on the list. If stablecoins become part of peer-to-peer money movement, merchant payments, creator payments, or cross-border flows, Cash App has a real distribution channel. But the problem is execution. Block has a lot of moving pieces. Square, Cash App, Afterpay, Bitcoin, lending, compliance, restructuring, AI, and operating discipline all matter. Stablecoins may be promising, but they are not yet the core earnings story. The risk is that investors may struggle to value the company cleanly. Is Block a payments company, a fintech platform, a Bitcoin company, a merchant software company, a consumer finance company? The answer is yes, but that also makes the story harder. The watchlist view is this. Block has meaningful long-term optionality, but right now it feels less directly levered to the stablecoin trade than Coinbase or PayPal. This one is interesting, but it is not my highest conviction setup today. Now, let's get to the final ranking. And this is where the watch list becomes useful. Number 5, Block, ticker XYZ. This is the lowest priority name for this specific stablecoin trade. Not because Block is a bad company. It has Cash App, Square, and a massive consumer footprint. But if we are ranking stablecoin risk-reward today, the connection feels less direct. The stock may work if management executes, if Cash App engagement improves, and if stablecoins become part of everyday payments. But there are too many other moving parts. For this theme, XYZ is the highest risk, lowest priority watchlist name. Number 4, Robinhood, ticker HOOD. This is the visionary but expensive and volatile name. Robinhood has a bold platform vision. It wants to be more than a trading app. It wants to become a financial hub for a younger generation of investors. That is exciting, but the valuation and volatility make it hard to chase. The crypto revenue drop in Q1 is a reminder that Robinhood can look amazing when activity is hot and suddenly vulnerable when activity cools. This one has upside, but also the highest sentiment risk. Number 3, PayPal, ticker PayPal. This is the strong long-term optionality name. PayPal may not give you the same excitement as CRCL or Coin, but has real payment scale, a massive user base, and PYUSD expanding across global markets. The market may still treat PayPal like an old fintech company. But if stablecoins become a serious payments tool, PayPal has a credible path to make them useful for mainstream consumers and merchants. Depending on what you prioritize, you could reasonably swap PayPal and Visa. PayPal has more turnaround risk, but also more upside if PYUSD adoption surprises. Number 2, Visa, ticker V. This one has the best business quality. Visa is not the flashiest stablecoin stock, but it may be one of the safest ways to watch the theme evolve. It has the network, institutional relationships, and payment infrastructure to absorb stablecoin settlement instead of being disrupted by it. The downside is that Visa is already a high-quality compounder, so stablecoin upside may not re-rate the stock dramatically in the short term. Still, if the question is business quality, Visa ranks near the top. Number 1, Coinbase, ticker Coin. This is the strongest risk-reward on the list right now. Coinbase has direct stablecoin economics, a deep relationship with USDC, a large crypto platform, and multiple ways to benefit if stablecoins keep getting repriced by the market. It is not safe. It is not low volatility. And it is absolutely not a stock to blindly chase without a plan. But if the market is saying stablecoins are becoming real financial infrastructure, then Coinbase may be the best second-order beneficiary among the public stocks we cover today. Here is the honest bottom line. CRCL is the obvious stablecoin trade, and after yesterday's move, momentum is clearly there. But not every stock connected to this theme should be treated the same way. Coinbase looks like the strongest risk-reward. Visa has the best business quality. PayPal has the most interesting mainstream payments optionality. Robinhood has big upside, but serious volatility. Block has real distribution, but the stablecoin angle is less direct today. And remember, this is not financial advice. Not every stock on this list is a buy today. Some are wait for pullback names. Some are high-risk positions. Some are quality businesses that may not move fast. And with any crypto-related trade, position size matters. The key is not to chase every headline. The key is to understand the role each stock plays. So now I want to hear from you. If you had to rank these 5 stablecoin-related stocks yourself, which one would you put at number 1? Coin, PYPL, HOOD, V, or XYZ? Drop your ranking in the comments. Hit the like button if this watch list helped, and subscribe to Stock Breakout for more practical US stock market breakdowns.